Hello, welcome to Stops Are In. My name is David. I've called my blog Stops Are In because when I started trading, people whom I had respect for in the market told me to trade with a stop loss. I didn't. I got burned. So now I view a stop as protecting me from myself, and I've called my blog Stops Are In to always pick a stop loss before I place my order. If you haven't checked out freetradingvideos.com, I suggest you do. It's a great website, some great folks there, all eager to share their experience and knowledge. And recently we've been talking about shorting gold. I thought I'd do my own analysis. The reason I do my own analysis is because if I don't know why I'm in the trade, I'm not likely to stay in it for very long. I can either get out too early or stay in too long. The instrument I've chosen is gold, ticker code GLD, and the chart I have in front of me is the weekly. The first thing I'm going to do is draw in some trend lines, and I'm picking this peak to this peak, as these are the two peaks with the most volume. This suggests to me that in these areas, this is where substantial activity, or along this trend line, substantial activity is likely to take place. Just want to notice a few things about this chart. The first thing is we've had this run up here. We've had this high followed by quite a steep high, and we've had this high followed by quite a steep high. And what I'm expecting next is a new high, but it's not going to be a very steep. The gradient between the highs is starting to lose momentum. This is a weekly chart. We're going to notice one thing. We see we've got a MACD up here well above our zero line, and even though we're approaching in relative terms, we're approaching this $105 area, our MACD is nowhere close to making a new high. Short term, slightly bullish. We're seeing new highs in unbalanced volume, one of my favorite indicators so far. We also seen last week some above average volume come into the market, but on a weekly basis, nothing spectacular. Look at the moves over the last couple of weeks. We had this recent new high here. This is about 8 weeks ago. Then we had a run down. We broke this trend line, which is why again I'm not drawing in our support line here. This support line ultimately didn't hold. So we had a run down, we had a Fibonacci retracement. We'll see that this is the first fib line. I'm not going to draw that in. But what we had here was this low, we had this pullback, we had another run up, and we had another pullback, but we didn't have a lower low. So that tells me short term bullish, in addition to our OBV and volume coming in. So short term, GLD is currently trading. You can see this is live at the moment. The exchange is open. It's trading at $95. I'm expecting it to get somewhere into the $104, $105 area over the next week or two. We also see that while interest rates were relatively high, gold was relatively speaking lower valued, and as interest rates started to be decreased, gold, in line with the idea that funds try and hedge against inflation by buying into commodities such as gold started to have its run up. Now here in Europe we're starting to see interest rates rise. I wouldn't be surprised in the next month to 6 months Bernanke doesn't have to in fact increase interest rates to combat inflation. That's one of the reasons why in the medium term I'm bearish on gold. We see interest rates start to rise. I'm sure we're going to see money start to come out of gold. Flipping over to the daily chart, we see here pretty much what I expect today. This is held. We're in an upward move, having moved out of our symmetrical triangle, but again there's that upper trend line, and it's still pointing towards resistance at the $100 to $105 mark. I can also draw in this trend line here, which represents our previous high. This is what we can expect. I would be expecting, and in fact I will be watching for some selling to take place. But as time drifts on, I'm watching to see if we start to see some deceleration in this recent up move out of the symmetrical triangle. I'll probably be watching on a 60-minute chart, looking for an entry, and to see if in fact we do see some significant selling taking place up here. On the daily, we can see MACD, even though we've broken out of our recent trading range and we've making a new high in the last 20, 30 days, our MACD isn't following with a new high. We can see our signal line is struggling to pull upwards and create a new high. Short term though, as I said, we are bullish. I am bullish on gold. In fact, I may take this as a long later today. I would be entering about $95, $98.40, and I'd have my stop loss just around here at $93.36 with a target of about $102, $103. That presents a nice 3-to-1 risk reward ratio. I haven't quite made my mind up about that yet, but for sure my bigger play in gold will be over the next couple of weeks, if things remain equal, a short play in the $100 to $103 area. That's the moral of the story and the subject of my first post. I am not ready to short gold just yet, but I am watching, and particularly when I take into account the weekly picture, and that MACD failing to make new highs, and the slope of the peaks of the highs, if indeed we do stall up here, to the gradient is decreasing, that tells me get ready to go short. The one challenge, of course, with shorting is that when we do get up here into this new high area, as I expect we will, it is psychologically the most difficult time to short the market when everything in the particular vehicle looks rosy. If you disagree with something I've said, you've got some comments, please leave them. I would love to hear from you. If you think there's something I'm missing, I'm a relatively new trader. Again, I would love to hear from you and get your feedback. So that's all for now. I'm hoping to update my blog on a daily basis. Tomorrow I'm going to be looking at trying to plan an entry into the SDS. I'm also going to be looking at, it's been suggested whether it's better or worse financially to short the SSO as opposed to entering the SDS long. I'm going to be taking a look at that over the last 3 to 4 months and see which would have proved the better play. Thank you for watching.